Food prices around the world may soon rise again, and the reason is not agriculture or even climate change, it's oil. Since the United States and Israel launched attacks on Iran on February 28, oil prices have surged past $100 per barrel for the first time since Russia's invasion of Ukraine in 2022. And when oil prices rise, food prices often follow. The biggest concern for global markets right now is the Strait of Hormuz. This narrow waterway between Iran and Oman is one of the most important energy routes on the planet. At its narrowest point, it is just 21 nautical miles wide. Yet every day more than 20 million barrels of oil pass through it. That accounts for about one-fifth of global petroleum consumption and a quarter of all oil traded by sea. Since United States and Israel's war on Iran began, shipping traffic through the strait has slowed dramatically. Attacks on vessels and interference with navigation systems have made many tanker operators reluctant to cross. Instead, some ships are anchoring near the entrance of the strait, waiting for the situation to stabilize. That disruption is tightening global supply and pushing prices higher. Oil is often called the lifeblood of the global economy. Nearly 80 million barrels of oil per day move around the world by sea, according to the US Energy Information Administration. When prices rise, the effects ripple across supply chains. Transport becomes more expensive, shipping costs increase, factories pay more for energy, and eventually those costs reach consumers. Food production depends heavily on energy. Oil fuels the machinery used on farms, the trucks that move food, and the ships that transport grain across oceans. But the link runs even deeper. Modern agriculture also relies heavily on fertilizers made from natural gas, which means energy prices directly affect crop production costs. When oil and gas prices climb, farmers face higher input costs. Food companies pay more for transport and packaging, and supermarkets pass those higher costs on to consumers. Much of the oil flowing through the Strait of Hormuz is heading to Asian markets. About 89% of shipments go to countries such as China, India, Japan, and South Korea. If tanker traffic remains restricted, Gulf exporters have limited alternatives. Pipelines in Saudi Arabia and the United Arab Emirates can bypass the strait, but together they can move only around 4.7 million barrels per day, which is far less than what normally flows through the route. Analysts estimate the world could face a shortfall of around 15 million barrels per day if disruptions persist. So, history shows a clear pattern. Major oil shocks have often been followed by inflation and economic slowdowns. Examples include the 1973 oil embargo, the Iran-Iraq War in the 1980s, the 1990 Gulf War, and the 2022 Ukraine War. Economists warn that when oil prices spike sharply, they can trigger stagflation, which is a combination of rising prices and slowing economic growth. But a key difference here is that higher oil prices do not affect all countries equally. In lower income economies, households often spend a much larger share of their income on food. Many of these countries also import grain, fertilizer, and fuel. When energy prices rise, food costs can increase quickly, raising the risk of shortages, inflation, and economic stress. So, while the United States and Israel's war on Iran is unfolding thousands of kilometers away for many countries, its economic impact is already global. Because when oil prices surge, the effects don't stop at the petrol pump, they show up on supermarket shelves as well.